Hi Forex traders, you're welcome back. This is Carrie's Trading Institute and this is our new week commentary for the dollar and foreign currencies, and you're going to be getting a lot of live commentaries from me going into the week and even subsequent weeks, alright, because right now I'm back on seat. In the last few weeks I've not been very stable because I had a lot of events I had to tackle, but right now I'm back, so we're going to be doing a lot of commentaries and a lot of live sessions together. Alright, so this week the first thing I would like us to do is to first of all look at our economic calendar on forexfactory.com. Alright, so just go to forexfactory.com/calendar or just click on the calendar here and just take a glance at the events that are likely to occur during the week. Usually we like to pay attention to high or medium impact news events because that's when the liquidity injection is going to come into the marketplace and you're likely to see speed coming into the marketplace when it confluences with a high or medium impact news event. All right, so tomorrow, 8th of May 2023, as we can see on the calendar here, we do not have a high or medium impact news event unfolding in the marketplace. Rather, we even have a bank holiday on the GBP. That means the GBP associated pairs might throw a level of stagnancy in the marketplace. We might not see that liquidity injection in the marketplace. All right, then there is a French bank holiday on the euro. All right, so that means all euro associated assets also may throw that level of quietness in the marketplace. Also, because I do not see any medium or high impact news event, meaning that this is what tells us that we might likely see a low liquidity injection. This literally signifies a low volatility day, the absence of a medium or high impact news event. All right, so on Tuesday, as you can see again, there is no medium nor high impact news event. So on Tuesday as well, we might see a low volatility day on Tuesday. All right, then on Wednesday we have a CPI news event coming up on Wednesday by 1:30 on the dollar. All dollar associated pair at this time of the day will throw a level of liquidity injection, will throw some kind of volatility. Then on Thursday we can see a lot of high impact news on the pound. All right, so the pound associated pair will also show a level of volatility on Thursday, May 11th 2023. all right, so going into Friday as well, we still see high impact news on the New Zealand dollar, the GBP, the USD. So these are the dates and kind of events you should be looking for, so you should pay attention to this day specifically. So today I'm going to also show you something I'm seeing on the seasonal tendency for the dollar index. Remember that we first of all would like to analyze our benchmark asset, and in this case our benchmark asset is actually the dollar index. All right, it's untradable, but we would like to know what's happening on the dollar so that we will know how to approach foreign currencies or major pairs or dollar associated pairs, especially because the benchmark literally determines the direction of the underlying asset, and also because most of the underlying assets are paired up with the benchmark asset, which is the dollar. All right, so when we analyze the dollar and we know the direction of the dollar, intermarket analysis literally tells us that if the dollar is going up, foreign currencies like the GBP, USD, Euro USD, or all currencies that have the USD as their quote currency, that is the second currency of a currency pair, all right, are supposed to go in the opposite direction with the dollar index. So if the dollar index is up, Euro USD is down, GBP USD is down, all foreign currencies are down. If the dollar index is down, then all foreign currencies should go up. All right, so I'm looking at the March contract for the seasonal tendencies for the dollar index. All right, and what we are seeing right here is that somewhere around May, you can see that around April, dollar formed a swing, a failure swing, all right, and started to go down right here. And then right at May, or at the start of May, we see the dollar forming a failure swing to the downside, unable to clear that previous low. However, it formed a higher low and then broke structure, a shift of market structure, and then the dollar is expected to go up right into somewhere around June, all right, or towards the end of May, all right, and somewhere around June the dollar might throw a level of consolidation and then right into the June contract. So but we are currently focusing on May, and what we are seeing on the seasonal tendency, these two lines you are seeing here, the blue line is signifying an accumulated data over 31 year previous. This data was accumulated for the previous price action of 30 years, over 30 years, 31 years. Then the red line is, all right, is accumulated from previous 15 years of price action. You can see it here, 15 years, that's the red box. The blue line is 31 years. All right, so this is just a tendency that the market might show. It may not happen exactly like this, but the market has a tendency to repeat these patterns, because obviously the market has patterns that repeatedly occur in the marketplace all the times, and this is one of it. All right, so seasonal tendency tells us that we should anticipate to see a level of buy side delivery on the dollar starting from May going into the end of May, all right, and a level of consolidation at the beginning of June and going into the June contract towards July, and it will continue to go down and seek sell side liquidity here. All right, so this is seasonal tendency. Then if we simply just go to the dollar index chart, all right, I'm going to show you almost the same thing. This is simply the monthly time frame. We had an expansion, we had retracements, price traded into that buy side imbalance, sell side inefficiency, all right, all of this buy side delivery and the fair value gap right there. And this also, we can call this a breaker block, because price from lower low before breaking that structure. Then we see price currently sitting at this level, fair value gap, and that's breaker block. All right, and then we've seen price finding it difficult to still take out this low, because it has previously taken out the previous sell side liquidity right here, that old low. All right, you can see it here. The dollar just tapped into that low here with a few pips. You can see it here. All right, so sell side liquidity was taken here, and we see that rejection inside the range. All right, and then the dollar has also opened this month and is throwing a level of downside delivery on the monthly candle, even though we might see this candle just start going to the upside and also trade into what levels, this fair value gap or sell side imbalance, buy side inefficiency that has not been traded into on the monthly time frame, this level, this inefficiency. And remember, if the institutions are delivering, the institutions are looking for two things. The first is they are looking for inefficiencies, and the second is they are looking for liquidity in form of buy side or sell side liquidity, or inefficiencies in form of sell side inefficiencies or buy side inefficiencies. Okay, so if you are finding it difficult to understand some of the things I'm mentioning, please take your time, go through the videos on the channel. There are a lot of informations that are enough to build you and make you profitable on this channel, even before you get to join my Forex masterclass and VIP mentorship, where you get to interact with other community of profitable traders, and you get to interact with myself for just $100. All right, guys, for just watching the videos on the channel, I guarantee you can be profitable if you pay attention to learn this concept appropriately. All right, so let's just go to the weekly time frame. What we are doing now is called the top-down analysis. All right, so on the weekly time frame, you can see that what we have here is the dollar traded into that fair value gap, expanded to the upside. All right, taking out that buy side liquidity here. Then we see that sell side delivery, or we see this expansion to the downside. And remember, price delivery simply says the principle is expansion, retracement, expansion to cancel liquidity. We should anticipate to see retracement also into what level? When price is retracing, we are looking at fair value gaps or inefficiencies, or we are looking at liquidity within an internal range that the institutions should seek for. But currently what we see here is that we have a fair value gap or a sell side imbalance and a buy side inefficiency. This price delivery is inefficient of a buy delivery. That's what it means. So we should anticipate to see a level of repricing into this fair value gap, all right, on the weekly time frame, or this fair value gap as well. But whatever is the case, we're anticipating a retracement into this level or this level right here. All right, let's mark out this level as well. Okay, so what we see here in the previous 3 weeks is that price took out that low, rejection to the upside. Then you can see rejection candles have been forming. All right, this previous weekly candle as well could not even take out this previous weekly low. So what I'm seeing here is higher low has been formed. Price has been forming higher low. This low was respected. Price formed a low. The previous week could not trade below that low. All right, and remember, our seasonal tendency says that we should anticipate to see a failure swing on the dollar. All right, something that looks like a higher low on the dollar and a shift in market structure that should take us into a bullish repricing into an internal range on the dollar in the month of May, going into the June contract on the seasonal tendency. So let's just go to the daily time frame. On the daily time frame, what are you seeing? Price took out the sell side liquidity residing below this old low. Then price has formed a failure swing. You can see this, right? The inability to take out previous low. It's a failure swing. Okay, something like this. Price formed a failure swing right here. Okay, then price gave us a shift in market structure. Okay, so we might start to see the dollar really reprice into these levels. Look at it on the daily. There are a lot of liquidity residing above these levels. This is a lot of low resistance liquidity run. The lows here, the highs here, the high here, the high here. This high here, buy side liquidity, buy side liquidity, buy side liquidity, buy side liquidity, fair value gap, mitigation block, fair value gap, fair value gap. You can see that, right? So this is how I'm looking at price action. All right, so we might see price really, the institutions reprice this dollar into that level, or the dollar might just decide to push to the downside to take out sell side liquidity residing below this relative equal low, and also seek that fair value gap in the discount of the monthly time frame. Okay, so however, whatever happens during the week open is going to tell us where the dollar is going to go. It's going to give us more ideas on the direction of the dollar. Okay, so this is expansion to the downside. Price created a bearish order block right here. Okay, with a fair value gap attached to it. Remember, the most valid order block is the one that has a fair value gap attached to it. So the current institutional order flow is a bearish institutional order flow on the dollar on the daily time frame. Okay, however, if we see a gap open higher, all right, at the Sunday week opening, then it tells us that the dollar may likely throw a bullish price delivery throughout the week. So we would start to anticipate a buy on the dollar into these levels that we already outlined, and this is the draw on liquidity. The buy side liquidity residing above all of these highs, the low resistance liquidity run. Some people call it diagonal liquidity, and the inefficiencies. Remember, I mentioned that institutions are looking for two things: inefficiencies and liquidity. Where is the liquidity residing? Where are the inefficiencies? So the liquidity is residing above those highs. This is where we have a lot of liquidity, and also liquidity is residing below this low, the relative equal lows here, and the inefficiencies below. Okay, However, because of seasonal tendency and because we see price finding it difficult to clear these lows, all right, so this is throwing a questionable price delivery that will need to get more confirmations before we start to throw in executions in the marketplace. This is the 4-hour time frame. All right, so you can see here this is a breaker block. Some of you may not be able to see it on the 4 hours, so let's just do the 1 hour time frame so that for clarity. This is the 1 hour time frame. Price from the lower low, price broke structure to the upside. So what we had here was a breaker block. Remember, the characteristics of a breaker block that makes it different from a mitigation block is the fact that a breaker block takes out liquidity before creating a shift in market structure. A mitigation block fails or finds it difficult to take out liquidity before giving you a shift in market structure. You can watch one of the videos on this channel titled institutional reference points. You're going to understand all of these things I just mentioned. So look at this. Price has been finding support at that breaker block, and remember, the breaker block is the second in the order of importance among the 7 institutional reference points that I taught on this channel. Okay, it's the second, and look at this. Price finding support here, price is finding support here again. Price even broke structure right here, took out liquidity, grabbed liquidity below this relative equal lows, broke structure, price traded into that bullish order block that has a fair value gap, expanded to the upside, price traded into what other block right here, expanded to the upside, took out liquidity. So you can see price is forming higher highs on the 1 hour, right? Then price went back into this other block, okay, and it's showing signs that it may likely going to start going up. Okay, all right, so we'll look for more confirmations in the London session and New York session. We're looking to see if we see a lower time frame shifting market structure or breaking market structure to the upside. We'd like to buy the dollar, all right, so that we can sell the foreign currencies, the GBPUSD, the Euro USD, and other foreign currencies available. Right, guys, so this is my analysis for the dollar. Okay, so just a quick analysis on the GBPUSD, which is my favorite currency that I trade. I only trade just GBPUSD. So the weekly time frame, we just take a glance on what's happening on the weekly. So currently we see that the GBPUSD is at a rejection block, bearish rejection block on the weekly. Price is at a rejection block. Okay, all right, so we still have inefficiencies right here, all of these inefficiencies that might be the draw liquidity. However, before that happens, we might see a retracement into this internal range. Why? Because we've had a lot of buy side imbalance and a sell side inefficiency, a lot of buy delivery without any sell delivery. And look at price action. Every time we see an expansion to the upside, we should anticipate to see retracement. Expansion into the rejection block, we might see a retracement into internal range. Are there drawn liquidities within this range? Of course there is. What are the drawn liquidities? They are the inefficiencies. Okay, you can see all through here. In fact, we have a volume imbalance right here. Okay, that might be a drawn liquidity, or you have an implied fair value gap here. 50% of this candle week, 50% of this candle week, it's an implied fair value gap. So we are paying attention to it, and we are looking to see that unfold as well. Well, price may like to continue to the upside and trade into that premium levels of the monthly time frame. So this is the daily time frame. Price has been forming higher highs, higher lows, higher highs, higher lows, higher high into that daily bearish order block. So you can see this. The weekly rejection block is a daily bearish order block that might throw a retracement into what level? Immediate term, we might like to pay attention to this fair value gap or internal range inefficiency or liquidity. That's the fair value gap right here. All right, we might see a retracement into this level, the bullish order block, before the pound dollar continues to the upside. But ultimately, look at this low resistance liquidity round 1, 2, 3 consecutive lows formed together. People call it, retail call it diagonal liquidity or trend line. The institutions would like to grab liquidity below this trend level and find significant support at a higher time frame institutional reference point, the order block, the breaker block, and the others. Okay, so when you go to the 1 hour, you might see more confirmations, because on the 1 hour, as at Friday, I saw that price was already showing interest. Price is forming a swing high around this level. Okay, and on the 15 minutes, price had already created a shifting market structure. However, an opening to the downside or a gap open to the downside will give us more it will give us more insight as to where we are going to on the pound dollar. All right, a gap open higher on the dollar will give us more ideas that we are likely going to go up during the week. We are anticipating. Okay, so this is my expectations for the dollar and the pound dollar going into the week. All right, guys, you're going to see a lot of commentaries and live analysis coming in during the week. Okay, if you are looking to get funded and secure a good equity for yourself so that you stop struggling with small funds, you can also just click the link in the description of this video. I secured the $400,000 trading equity with the Forex funder in less than a week. If you haven't watched just the previous video, I'd like you to watch so that you stay in tune with what we are doing. So secure trading equity for yourself. Get started, guys. Stop playing. And if you use the coupon code in the description of the video, you will even get up to 30% discount on any account purchase you make with the Forex funder. Don't forget, hit the subscription button, turn on your notification bell so you stay updated every time I post a new video. And until next time, I wish you good luck, good trading, stay safe.